Scott, you talk about and dissect and think about these companies so closely. What do you make of what this might mean for them? I mean, certainly Amazon, not the only big tech company that has a lot of source income from China, but some people have thought that maybe they'd be more resilient than some of the other names, obviously, like airlines, which are getting so hit right now.
Yeah, and I think I would argue they have been more resilient. If you look at Apple in the last 12 months, its earnings haven't meaningfully increased, yet its valuation doubled. It went from a P of 12 to 24 and is probably now down to the high teens. So I just think it's letting some air out. But we were talking about future generations, and your previous guest was talking about the importance of investing over the long term. I only have, people ask me all the time, what stock should I buy? And I only have two criteria. Is it a monopoly, and is it unregulated? And if it's an unregulated monopoly, then invest. And Apple, Amazon, and Facebook are let's be clear, unregulated monopolies. So my viewpoint is on dips like this, it's an opportunity. I don't see, sure, there'll be exogenous temporary supply chain shocks to Apple. Maybe people feel a little less secure about spending in terms of digital marketing on Google. But it's just great to be an unregulated monopoly. You talk about Netflix. I mean, the thing I think that's impacting Netflix is in the last 2 years, we've had an incremental $40 to $50 billion in original scripted television from other players invest in the space. So
Bonanza.
I'm trying to figure out what industry has ever registered an incremental CapEx investment in their category from new players of $40 to $50 billion in 24 months.
It's insane.
Just remember,
I think it's the most interesting business story there is right now is the streaming.
100%. Remember 2 years ago, we were sitting around this desk and talking about $1 billion, the best storyteller in the world, the best tech executive, and short form video, Quibi. How can this lose? Quibi is stillborn. $1 billion is literally bringing a squirt gun to a howitzer fight. How can anything with just $1 billion enter the streaming video wars and do anything right now?
Well, because you're asking people to subscribe to yet another thing, to pile another subscription onto that platter, which they're willing to do if there's like a must-watch show. Like when I've seen all the Quibi ads, it's just, I don't know, even if you think the idea is smart, the concept of the short-form content, all of the different original streaming apps right now, they have to have one big must-watch show that gets people to pay off.
You have to have The Mandalorian. Yeah. You have to have, I mean, think about what's going on here. For 82 cents a month, Apple will give you $1 billion in original content. So $5 a month, same as Quibi, except Apple will give you $4.5 or $5 billion a year. They basically, and what do? They spend Game of Thrones-like budgets to recreate Murphy Brown in the form of the morning show because they can. They don't need to be profitable because if they sell more of these, the most profitable product in history, they're just fine.
That's exactly the reason why I got Apple TV Plus, was just to watch the morning show. What does that say, though, about new entrants to this space? Because it sounds like you really can't get into this space unless you're one of these already existing giants.
That kind of describes our economy. In almost every sector, you can go sector by sector by sector, more and more power accretes to one or two firms. The DOJ and the FTC have been feckless, asleep, comatose, whatever you want to call it. And the reality is the incumbents get stronger and stronger and stronger. The fastest growing parts of our economy are the least funded for startups. Try and start a search engine right now. Try and get funding for a social. There hasn't been a social media platform launched of any size since 2011. Tech hardware, Sonos is a superior product. Apple's going to put them out of business. Right. Spotify is a superior product. Amazon Music or Apple are going to put them out of business. We have the best thing we could do to oxygenate the economy and get those lights green again would be to go in and break up these guys into much smaller companies.
Interesting prediction about Spotify because maybe it sells. It has done pretty well.
Maybe they bundle with somebody or team up.
There you go.
Yeah.
Let's make sure that we also hit. I mean, we're talking about stupid amounts of money in some cases going into certain areas of the economy. Let's talk about WeWork because you, Scott, have a new podcast called We Crashed, where you are looking at this fascinating story. And now, since then, I mean, and the WeWork story is not over, and yet so many other examples of overly hyped, overvalued unicorns, now they just get compared to WeWork. It's like, the next WeWork.
Yeah. WeWork, I think WeWork is more spectacle than historic. It makes for a great story, but the reality is the markets did their job. They ring-fenced it, and the folks that lost money were SoftBank, the PIF out of Saudi Arabia, the Mubalaba Fund, and the real human toll here, if there was one, was the employees who were probably all looking for new houses or planning on taking their family on a cruise, and now have decided, okay, maybe I want to have health insurance. But sure, this was sort of the mother of the perfect storm of what I call a hubris in venture capital. Very talented entrepreneurs taking advantage of a trope. If you tell a 30-something-year-old male who's Jesus Christ, he's inclined to believe you. If you offer someone $5-10 billion for their startup, even if it's unprofitable, they're inclined to cash that check. And so we're starting to see a little bit of a pullback. But there had been a lot of consensual hallucination between venture capitalists and the founders of these small companies, and essentially the market is starting to, I would call it, rationalize. So I would say the market is actually working right now.
Do you see other like WeWorks kind of out in the ether, and what are kind of the red flags for you? Excuse me, when you look for these types of companies?
Well, the first red flag is vision funds involvement. It's hard to imagine, and I don't say this way. It's hard to imagine. This isn't irrational. This has just been bottom line stupid. Let's put $1/3 of $1 billion in a dog walking app run by people with almost no investment experience. Let's put billions of dollars into a firm trying to roll up budget hotels run by a 26-year-old whose job before this was selling SIM cards. I mean, it just one by one. And to be clear, they have some winners. They have Slack. So the first red flag would be, let's look across all of SoftBank's portfolio. But you also have to realize that there's a bit of a marketing game here, and that is the last private market valuation is meant to set a number to get momentum going into the public markets where we can foist our feces from these unicorns on tourists to the unicorn zoo known as retail investors.
Did you say our theses? Because I misheard you guys. Our feces, but either one would work.
No, it's definitely venture capitalists flinging unicorn feces at tourists to the unicorn zoo. But the markets have done their job. They put up the firewall. They got burned with Uber. They got through the firewall, and then they read the S1, which is testament to the SEC, a government institution, God forbid, that mandates disclosure and numbers. So I think the markets are working and checking back. The most recent example, Casper, that is now worth less than the money it's raised.
Well, and it is becoming, I mean, if you were a business reporter, you already knew this, but the S1 has become, to me, the treasure trove of information, stories, discussion, because that's when you see how these companies see themselves, and increasingly, it's a delusional vision, but we have to leave it there.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.